I'm an optimist, and even I'm surprised by how strong this market is behaving. Let's take a look and see what's coming next for the market. Okay, friends, let's talk about this market that is just absolutely scorching right now. So what I'm showing you here, this is how we look at it every week. This is the S&P 500 in red, the 200-day moving average in purple. And what you notice is the stock market has once again taken another step higher. We're on highs for the year watch, and we're not that far away from all-time highs watch. Now, from what I can see at the market, this rally's been going on for a little while. It's a little extended. It's a little long in the tooth. I wouldn't be surprised, and I told you this last week, 4,600 on the S&P 500. We're going to get into a little bit of congestion there. That's 460 on the SPY. We're basically there right now. We're at 459. I think there will also be some congestion around the all-time high at 4,800, 480 on the S&P 500. So what I'm telling you is I wouldn't be surprised if the good news that the market has been bringing us, if that changes a little bit. In terms of seasonality, typically December is okay, not great, until you start to get to the end of the month. And so as we get towards the back half of December and really, almost all the way up right till the very end of December, that's when things are going to start to get better again. So if we have a little bit of congestion, a little bit of sideways activity, that wouldn't be surprising to me. And I would actually view it as pretty healthy right now because of how strong this rally has been. One of the things that I have been watching that just seems insane to me is what's happening with interest rates. We've basically had a collapse of interest rates, and that is what is powering this move higher. This is the 2-year Treasury. We use this as a good determinant for where the Federal Reserve is going to move in terms of their interest rates. You can see here from a peak of around 5.25, we're somewhere around 4.5 right now. We've given up previous support. This is new territory, at least since the rate increases. This is new territory towards the downside. And so what this chart is telling me, this is a very strong chart. There's some powerful forces going on here. I would not be surprised to see these interest rates go lower. This is the market signaling that the Fed is done hiking interest rates, and we're starting to price in how low rates are going to go next year. Even more impressive than that is what we're seeing out of the 10-year. The 10-year is important because this really determines mortgage rates and all sorts of maybe longer-term big-ticket item financing costs. From a peak of around 5%, we've dropped all the way down. I mean, we're below 4.25 right now. That's unbelievable to me. And if you look at this chart, yes, the rate increases were very strong, very significant, but more important than that, the wind coming out of these sails is, equally as significant. So rates are coming down. And if we look at Fed funds futures, essentially the odds for a Fed rate cut, it's almost 80% in March. So this is both good and bad. The good is all of these things coming together is very positive for the market, and that's why we've got the rally that we've got. The bad is this is building expectations. And so when you have expectations, you either live up to them or you don't. So this also sets us up potentially for disappointment if all of this, good stuff in the future really doesn't materialize. So that's why the rally's been as strong as it's been. It's mainly been an interest rate story. I think it's getting a little aggressive here. So I think we're going to get into some congestion. That wouldn't be surprising to me at the levels that we're at. And some of this exuberance that I'm starting to see, I think that also says we're going to hit some congestion. One of the biggest things that I'm looking at, this is month-on-month returns and year-to-date returns, but month-on-month, if we look at what's doing well this month, these are some of the things that I started talking about maybe 2 weeks ago. Anything that's connected to an interest rate is starting to look very strong, whether those are REITs, whether those are small caps, whether those are investment-grade bonds. I think we're starting to see the interest rate sensitive segments of the market start to come back. And this is really important because this is what's going to broaden out the rally, and this is what's going to help sustain us as we get into 2024. So all of this is good. I just worry that it might be too much too soon. And so I don't want us to start getting disappointed as we get into early 2024 when some of these rate cuts maybe don't materialize. But for right now, everything looks very strong, green light all the way through to the end of the year. If we get a little bit of congestion here at 4,600 in the stock market, I'm not surprised. And in fact, I hope we do. I think it'd be healthy for us to slow down a little bit. So there you go. Got nothing but positive things to tell you. I'll see you next week.